What is going on with Bitcoin treasury companies? Why is it such an emerging trend? And how the hell do they actually raise money to buy Bitcoin? You'll find out all of that in this video. First off, before I get into the nitty-gritty details, I have to make something clear. I will talk about publicly traded companies who now became Bitcoin treasury companies. There is, of course, also the possibilities for regular companies to turn assets cash into Bitcoin, to maybe allocate a certain percentage each month in revenue to Bitcoin, which is something we're seeing at Relai Business. Or on the other hand, even get services paid in Bitcoin, so you can also build your own treasury there. However, today we talk about publicly traded companies who simply have more levers to their advantage to actually raise capital to buy Bitcoin. Because at the end of the day, that's all what they are doing in very simple terms. I could go down even into more financial models, but for now, this is a simple explanatory video. A publicly traded company has different models or different finance vehicles, let's call them, to actually raise money through debt. The simplest form would be to issue a corporate bond. It's very straightforward. You issue the bond, you give up a certain yield on that bond, you find investors who are willing to buy this. These are mostly hedge funds or traders on Wall Street who have a speciality in bond trading. They see the opportunity there, they have their own strategy as well, and whenever they buy that bond, which then matures in the future with said yield, you actually get the money to buy Bitcoin. If you do this, you actually pay or you play the game to see if Bitcoin increases in the future, potentially in that time period of the bond. And if it then expires, either you would have to sell a small portion of the Bitcoin holdings, or ideally, this is mostly if you have a very strong operating business, out of the operating cash and revenue you generate, you pay back the bonds, and through that Bitcoin exposure, your company increased in value. However, the more, I would say, famous example here with strategy is that actually companies who have maybe a very slim margin on operating revenue, or who simply have been flat for, at this point back then, 2 decades, need to find another way to actually generate income. They need to find another way to generate attraction for investors to buy the stock, and therefore also increase the company's market cap. And that's where 2 different models of actually raising capital come into play. One of the, I would say, more famous models is the preferred stock option. And the preferred stock, in very simple terms, there are different variations, but simply explained, it's actually a stock where you are a preferred holder of that stock. So in case of a bankruptcy or anything associated to that, you are first to actually get your money back. However, you don't have any voting rights. Again, different models apply maybe, but that's the simple term and explanation of it. Through this, and it's a very popular means to actually raise capital with publicly traded companies or on Wall Street, you actually find very attractive bond traders, or at this point also investors who may be interested in your company and who want to also gain a further advantage. Through that buying, you then can continuously buy Bitcoin, as we've seen with strategy. And that's a key point with these Bitcoin treasury companies. They become essentially Bitcoin stocks and proxies for the Bitcoin price. Yes, they have exposure to Bitcoin, but they're not the real deal. However, they're very attractive for maybe hedge funds, pension funds, who are not allowed to invest into spot Bitcoin or spot Bitcoin ETFs. I'm looking at you, UK, where it's actually harder to gain exposure to Bitcoin. So these stocks, mostly because they're publicly traded companies, don't have any issues, so they can buy them. Or think of Japan through MetaPlanet, where you actually have a very complicated tax system if you hold Bitcoin directly. So it just amplifies the opportunities to invest into Bitcoin. Preferred stock is one of the first choices. The second choices are convertible bonds. And it's also very interesting and sometimes complicated model, but essentially what you have as an option is you buy one of these issuance schedules. You then have the opportunity to get a bond in between those schedules, so they also mature. And it's very popular amongst bond traders because it enables you to decide, hey, worst case, if something happens, I have a certain price where I know I can either convert that into stocks, I can convert that into cash, I can even convert that into other assets. It really depends what the convertible bond implies. And if you are then a bond trader, to you, it's attractive to actually hedge and protect yourself against the up and the downside. Simply put, for you as a retail investor, it's just another Wall Street instrument that is very popular amongst a certain group. And it's a very easy exposure, as we've seen through strategy with incredible interest and liquidity into these bonds, to again raise more capital to buy Bitcoin. But that's the key point. You really have to buy Bitcoin continuously for these companies to actually turn the stock into Bitcoin. GameStop is a very famous and unfortunately bad example that you cannot just buy once Bitcoin and hope that the stock will actually turn into a Bitcoin price movement stock. You also have to do the proof of work at this point to then turn the company into said Bitcoin stock. But I want to make something perfectly clear. These companies, they operate not only on a YOLO principle where they come in and say, oh, you know, I have these bond issuance, depending on whatever it is, or preferred stock, so just buy or hold Bitcoin in happy days. They obviously have to think about a lot of scenarios. What happens in a bear market? What happens if our price drops? What happens if the stock price goes down? And all of these things then come up with, I would call them, simply explained, different price levels for Bitcoin, for their stock, and maybe also for other stuff with the bonds itself, where they have certain strategies to protect themselves. This gets into a very interesting thought principle in this bull market, where you do see a lot of companies emerging now because they see, hey, if we issue this stock, maybe even if we're a small company, we can actually get some returns for our shareholders. And there I would say you just have to wait it out until the next bear market to see if these companies can actually hold on to their Bitcoin, or if they get pressured into then actually selling or not being able to raise some capital anymore. However, Bitcoin treasury companies are a very interesting time in the market right now and a very interesting instrument. They've really made Bitcoin accessible to publicly traded companies as well. But I'm more interested in actually your opinion about the matter. Have you had experiences with them? Have you heard of them before? And what do you think about them? Let me know in the comment below this video, and I look forward to seeing you in the next one.